Good afternoon, everybody, and thank you for joining us today as we are going to talk about private companies equaling private credit, being a detective to see where you can find all this information. Thank you for joining us, and we are here with Deanne Johnson. Hi, Deanne.
Hi.
Thank you for joining us. Do you want to tell everybody a little bit about yourself?
My name's Deanne Johnson. I'm a CCE. I work for Acor Concrete Cutting. We are a concrete service company. I have been in construction credit for 20 plus years. Prior to that, I worked for Kenworth Sales, the trucking company. And before that, I worked in the private sector. Before that, I worked for the government. So I have a kind of a well-rounded view of businesses and what's expected on both sides.
Absolutely. Well, thank you for taking time out of your day to be with us.
Thank you.
Next one. Oh, there we go. If you don't know what Level Set is, we are a software construction company. We help with liens and waivers and getting bond claims filed and that sort of thing. But we also have a community, which is what you're watching this webinar through today. It's a group of credit professionals. We do education with each other, different classes. We have meetings that we do, as well as much more. So if you want to know more about that, just let me know. And I will go ahead and let you take it, Deanne.
Thank you. So first and foremost, thank you everybody that's logged in, and I hope you find something within this that is helpful for you. And I am open to feedback. So I think toward the end there might be some time for questions, or if you have comments, things that you might have found that have been helpful for you. So we're going to start off with, first and foremost, the best way to protect yourself and to protect your company is to have a defined written minimum credit criteria for all prospective customers. Because you know what, at the end of the day, our job is to not say no, but how, right? So if you have a minimum credit criterion that you have sent out to all of your sales and all of your managers, and they understand what's needed, first and foremost is your credit application, right? And do you have a threshold as to where you're going to require a personal guarantee? And if you get that personal guarantee, do the people that sign the personal guarantee have the authority to sign the personal guarantee or the application? So there's a lot of things that go into your first steps, right? So ask for those trade references and banking information, and then follow up on those requests. I had opportunity recently to talk to a gentleman who is starting a service that what they provide solely is to help companies like ours get information from banks. So if you guys are interested, I'd be happy to share that information with Lori after the presentation, and she can send that out to you. He's a fairly new company, but they have a relationship with many of the larger banks, not so much credit unions, but the larger banks, that if you have a customer that lists a banking information and you have the account number, they can usually within 24 hours have that information back to you. So Lori, am I driving or are you driving?
I'll go ahead and turn it for you.
Okay, next page. So we're going to talk about a little bit about the magic of a Google search, right? So you're going to do your basic search. You're going to see, does the company have a website? Is it professional? Does it list the owners and officers and locations? Can you match any of the information that's on the website on your application or on your contract? How big is the company? What type of work do they do? How long have they been in business, and how long have they been in this area of business? I had a chance where a customer applied for an account with a previous company, and he was a new startup company. But when I researched him, he was actually starting up a different side of his large construction company. So sometimes you're going to search not just by the company name, but the owner or officer's name, right? Because you can link them to that company that they're applying for, but maybe they've been with other businesses. In the state of Utah, contractors licenses and business licenses are issued to businesses, not people. So one person can have multiple businesses. So do a Google search on the owners and officers' names. What does that come up with, right? Do they have information on LinkedIn or Facebook? And talking about that, most companies, if not all companies now, have some sort of social media presence. So they have Facebook, Instagram, LinkedIn. So not only can you look up information about the owners and officers, you could also look up information about the company themselves. And what information could you find? Maybe they're posting pictures of their latest project. Maybe there's pictures on there, if you're in a leasing type situation, they're showing pictures of the type of equipment that they're using or leasing. Again, that just gives you an idea of the type of company you're going into business with, right? Then search the physical address of the business. Do a Google search. Is it an office building? Is it a private residence? Or is it a UPS store where they just receive mail for that particular company? Not saying it's bad, not saying it's good, just you want to know, right? We had a situation where we had a customer that had a private residence address and we shipped product to his private residence. Was that a bad thing? Probably not. The type of business he was doing, it wasn't out of the norm, but would that be something that you would feel comfortable with, right? If you're shipping products, do you want it to go to a private residence, or would you feel more secure if it went to a business location? Does the phone number they provide tie back to the company, or is it a personal cell phone? A lot of times we have experienced where the number that is listed on the agreement or on the credit application is not the main number for the company. It's the estimator or the sales guy or the project manager. You want to talk to the person at the location that can tell you, yes, they are going to be doing business with you. Yes, they have signed the application, and yes, to move forward. Especially right now where there is some business identity theft. You want to make sure that who you're doing business with on paper is who you're doing business with in reality. So make those phone calls. Don't depend on email. Emails can be rerouted. So do your Google search. Do a business search through your local Secretary of State and see if they publish numbers, and call those numbers and verify that if they pick up the phone and they say hello, which I've had happen, or if they pick up the phone and say XYZ company, how may I help you? Right? There's a clue right there. Go ahead.
I was actually going to.
Yeah.
I was just going to throw in there really quick. When you're doing the searches on social media, it actually works out really well, because I had a customer one time that said they didn't receive our material, but they had a picture of our truck unloading the material at the same job site on their Facebook account. So you got a lot of good information.
Yep. And just be careful with social media, because there are still some laws. Different states have different laws that govern how you can use social media. But as long as it's public media, you cannot friend them to get the information. But if it's public information, it's public information, right? Same thing as if you do a Google search and, it comes up that there's a negative rating through, Better Business Bureau, or a lot of these Yelp sites and stuff have rating systems. Now, I'm not saying you take that at 100% into account, but it's information, right? So if you are doing business with somebody and they claim that they've been in business for 20 years, and you can only show that they've been in business the last 2 years, and then you look on your Google search, turns up that, well, yeah, there was another business that had that same name from years ago, but this is an entirely new business. That's when you start asking questions, right? That's when you put on your detective hat and you start asking questions. You pick up that phone and you say, did you guys used to be at this address? Because I'm seeing something at this address. And they'll either say yes or no. Again, names are intrinsic to businesses, but we all know that there are businesses out there that have the same or very similar names. We want to make sure we have the right information, billing wise, name, so that when we do our research, we're building our file for that company, not a lookalike. So, and I was going to say, I see your guys' questions. If you're okay with it, we'll wait till the end and then we'll do all the questions. And I promise we will get to everybody. So here's some other additional questions that you can ask. So what's the current financial market for the type of business they're in? It's a good question right now, right? What is our hardest hit market right now? Restaurants, right? Restaurants and fast food places, service industry, because labor shortage and supply chain shortage. So not saying you're going to say no, but what is the type of business they're in and what's the market in your area for that business or the area they're going to be doing business in? Another thing is what's the economical environment for the city or state that they're planning on doing business in. If they're going into a depressed market and they're going to open up a new company, what's the viability long-term for that particular business? Now, again, we're mostly short-term creditors, right? We're not, and I'm not speaking, there could be some mortgage people on here or financial institution people on here. So you're looking long-term, but short-term, you know, if you've got a company that you're setting up and you're shipping product to, and within the first 30 days, they decide, nah, not going to work, and they close their doors, you need to be prepared for that. That happens, right? That's the reality of our world. So where are they located? Are they a one-man operation? Does the guy operate out of the cab of his pickup truck, or does the lady operate out of her basement? Or do they have several locations? Are they local to your state? Are they, you know, are they statewide? Or are they, you know, throughout the United States? Or are they international? That kind of plays into all of this. Is the address listed on the application the main office or a branch location? You always want to make sure that you have the main office location information, because that's where the signers of the checks are most likely, right? If it's a mailing address, is it a P.O. box? You know why we don't want P.O. boxes? You can't serve notice to a P.O. box. If something happens and you have to go legal on this, you need a physical address to be able to serve documents to. A process server cannot serve papers to a P.O. box. Are they existing company but new to you? And if they are, where have they been getting their goods or service prior to coming to you? Why are they looking at moving their purchases? There's a lot that can be said for that, right? Maybe you offer a specialty product that their other supplier does not, or you know, maybe you have better availability than who they've used in the past. It also could be that maybe they've had some issues with their previous supplier or service provider, and now their account's put on hold. These are things you want to know. And if they're a new company, what type of experience do they have in that industry? You know, we as a country, we promote entrepreneurship and people getting into business. But, you know, if you don't have experience in what you're going to go into business in, and you don't know the ebbs and flows, are you going to be successful? And how does that affect you as the creditor if they don't have good ideas what is required? So, and I'm just going to give you for instance. So in the state of Utah, you have to have a contractor's license in order to do construction work in the state of Utah. So if it's a new company and they don't know that they have to have a contractor's license in the state of Utah, and I open them an account and allow them to purchase, we've given up our lien rights. So, you know, just some stuff to think. Always keep in mind where you're doing business, what the laws of that state or county or parish or whatever is, and pull that in. Go ahead. So then again, more places to look. The Department of Commerce, or, you know, the Department of, or DOCL, Third party, Dun & Bradstreet, Credit Risk Monitor. There's Moody's, S&P, Fitch, Experian, Credit.net. You can go to your, what is that? Pacer. I'm sorry, my brain just went. Pacer will tell you, if you don't know what Pacer is. Pacer is a free service where you can see if somebody's declared bankruptcy. You can look for SEC filings. You can look for public records that show lien searches or shows liens, foreclosures, anything like that. Again, Google, LinkedIn, Facebook, Angie's List. While that kind of sounds weird, and if you guys know, there's like Thumbtack, Angie's List, depending on what you're doing, if this is a small entrepreneur guy, are they listed with something like that? And are there reviews? You can also look at the Better Business Bureau. A lot of people don't report to B&B or the BBB anymore, but sometimes there are some things out there that you can find. Better Business Bureau will actually give you at least an overview of information on the company, the date it was started. They might not have a rating, but it will give you basic information on the company. Go ahead. Where else can you look? You can look on business and industry magazines. Most of the industries out there have some sort of centric publication that they have just for them, right? Find out what that is. Look at that. Maybe they don't hit Business Week, but maybe they're in your local paper that comes out just to your area, where it says, new business coming in, and you might be able to find some information that way. Financial pages. We have a paper that we get that is basically just for the greater Salt Lake Valley that goes through new businesses and when they've opened and who their owners and officers are, and basic information. If you have one of those, that's a great resource to find information on who you're trying to vet for a credit app. Go ahead.
I was going to say Melissa is raising her hand. Do you want to chat with her?
Yeah.
Melissa.
Hi, Melissa.
You got to take off mute.
Can we take her off mute?
No, I asked her to unmute.
Okay.
Maybe she stepped away. Well, we'll come back to that. Go ahead.
Okay. So, so then we're back to the banking information, right? So what we want is we want the name of the bank, and the account number, so we can send that request. Bank information, and we all know banks sometimes will share information and sometimes not so much. Melissa says she inadvertently hit raise her hand. You're fine, Melissa. Thank you. But some of the information you want to find out is, the account balance, not necessarily the total amount, but is it high six figures? Is it, less than $50? Length of time as a customer. Do they have a credit line? Has there ever been any NSF checks? Has the account been closed for any reason? Trade references. And again, there's specific things that we can ask now that we can't ask now that we could before, because they violate antitrust laws. So basically what you're going to ask is the amount of time the account has been open, high credit within the last 6 to 12 months, and average days to pay, and if there's any NSF payments. Asking what somebody's terms is actually a violation of antitrust laws. Just like your pricing is between you and your customer, terms are between you and your customer. So you can ask, but if they say they're not going to answer, probably best that they don't. And then you can require a personal guarantor from the owners or partners. And when I say partners, this is something that I've always done. If it's an LLC or a partnership, I want personal guarantees from everybody. The reason why is in a limited LLC, LC, limited liability corporation, limited partnership, They're only responsible for the amount of money that they put in to start the company. So if they owe you $50,000 and the person that signed on the dotted line only put in 1,500, they're only responsible for 1,500 unless you have that personal guarantee. And if you have personal guarantees from all of them, this is my thought process. I want to go after as many people as I can, because if I have a personal guarantee from one person and they don't have any assets, what good is the personal guarantee, right? That leads me to the next thing. If you have somebody sign a personal guarantee, check their credit, because the personal guarantee is only as good as the person that signs on the dotted line. Go ahead, next page. Okay, things that make you go home. And I think somebody posted this. I saw a question pop up, so we'll get to this later. But this came up some years ago. Do you have when you require a personal guarantee, do you require that the original application with what they call wet ink signatures be mailed or otherwise delivered to your office? And do you require that the personal guarantee signatures be witnessed or notarized? The reason why I'm asking this is there have been several successful cases come up across the United States where the person who signed, quote unquote, the personal guarantee claims they didn't sign it. And the courts have sided with the personal guarantor saying, well, you as the credit lender, because that's basically what we are, should have done due diligence and asked for that to be notarized. It might be their signature. It might not be their signature. We have no way of knowing. Yeah.
What would you say to the companies then that have the online credit application where everything's electronic?
Those are actually probably your best bet, because if you are doing through electronic signature, there should be they call it a secure capture, where it pings to the email and the IP address of the computer where that was signed, which can then go back to the company, right? And you know what? I've done this myself. I've actually reached out to people and say, you know what? I can't, what you've signed doesn't come through on my side. Can I just have you sign and send me back the signature page? You know, again, pick up the phone and make the phone call. It doesn't do anything. You can't be told no if you don't ask, I guess. So, okay, next page. So personal guarantee equals personal credit. So if you're pulling personal credit to guarantee, you want to make sure that the person that is signing the personal guarantee is credit worthy, right? Because you're basing what you're going to allow them to have, your credit limit, credit guide, whatever you choose to call it, based on their personal credit, right? And I'm going to put a codicil in this because this is something that comes up. So what should you look for? Do they own a home? Right? Because we want assets. If you have a personal guarantor and they have great credit, but they don't own any assets, what are you going to go after and hold hostage if the account goes south? Right? And I'm not saying this sounds really terrible, because we don't go into this thinking the account's going to go south, but that's what we have to think about, right? Do they have a second mortgage? What's the total monthly payment? How long have they had this? Have they ever been reported as past due? Do they have vehicles? Are they over or at their limits on their credit cards? Do they have liens or judgments? Have they ever filed a bankruptcy, and why? Because the reason why I'm going to put the why in there is because we all know bad things happen to good people, right? Life happens, and sometimes what happens is completely out of control, and it's not that we intended for it to happen, but something catastrophic happens, and before you know it, you're in over your head, and you have to file a bankruptcy just to maintain living space for your family, right? So ask the question. You filed bankruptcy? Why? They're going to tell you. It's public record that they filed a bankruptcy. But the same thing as if you pull a personal credit and you see that they have judgments or liens filed, ask them why. If it's a medical thing, maybe there was a catastrophic medical event and they're trying to dig out of it. They're doing their best. Does that say you're not going to grant them credit? Not necessarily, but it may give you an idea on how to put their terms in better perspective. Again, how many inquiries have they had in the last 30 days? And I'm going to say this because the number of inquiries will affect FICO scores. So don't just look at the FICO scores. Look at the overall information. Because if you've got a person who is trying to start up a business and they've gone to 5 different people wanting to set up credit accounts, and all 5 of those people have asked for personal guarantees, and all 5 of those people have pulled, their personal credit, their FICO scores are going to be pretty low. I'm just saying. So take that into consideration, right? You can kind of see at the bottom, depending on who you pull your credit reports through, you can kind of see who's pulled credit and why at the bottom of the report. So kind of take that in consideration. If they're trying to set up a business, their FICO scores could be taking a hit because they're looking at financing a company on their own, right? That's why it's always good to go to the bank, because if the bank says, yes, they have a credit line with us, then that credit line is a backup for their personal guarantee, right? Or if they have credit cards, and I hate to say this, but if they've got personal credit cards and there's enough room on that credit card that they might be able to slide in one of your invoices, there you go, right? Go ahead to the next slide. So then, again, your FICO score, this is just kind of a generic range. You have to look at it for your industry, right? So if you're, depending on what type of company you're dealing with, so let's just say 675 or above FICO scores A credit, meaning it's a minimum risk, so they have an open-ended credit guide. Now, we use the word credit guide. And the reason why is from my previous days of working in consumer credit. The word credit limit, as governed by the federal, whatever that agency is, if you use the word credit limit, so you give somebody a $5,000 credit limit and you allow them to go to $10,000, legally they are not responsible for 1 penny above that $5,000. So we use the word credit guide because that allows us to be flexible with our customers, right? I might set a credit guide for one of our customers for $50,000, but 1 month they might need 75. The word guide allows me to be flexible within that term. And we make sure that that's through all of our documentation. We don't use the word credit limit anywhere. We use the word guide. And normally, just so you guys know, I don't share that information with my customers. If they say, well, how much is my credit limit? I say, well, because of the type of construction industry we're in, we don't assign a limit per se. We use a guide. And right now I've got you around 10K, but if you need a little bit more than that, we can be flexible. And that usually makes them feel happy, right? Oops. Do we have the old one? Because that's the tax return. We weren't going to do the tax return. Oh, okay. Just keep going. Pay no attention to the woman. Okay, here we go. Putting it all together. You can use tax returns. I think we left that in there. If you guys saw my previous or have seen my previous webinar, you can use tax returns as financial statements if your customer will give those to you. If you want more information about that, Lori has that deck, or I'm happy to provide that too. So
you can also go to Level Set Webinars and just look at for Deanne's last one, and it's got the whole presentation as well as the slides.
Perfect. Thank you.
No problem.
So now we can move on to the next one. So putting it all together. Now, this is something that is near and dear to my heart because as we all know, with the exception of a very few, we are not an island unto them to ourselves, right? We have people in other branches or other divisions, or maybe we're training somebody to be our backup, where we want to make sure that we're treating everyone the same across the board, right? So I have a little spreadsheet that assigns numerical value to each area of the credit inquiry. Kind of gives you an overall picture of your prospect. It's more black and white, so you can more easily convey your findings to your salespeople or your C-suite or whomever you're needing to provide this information to, without giving them the confidential information that we can't share with them, which is credit reports, right? We can't share with them the credit reports or the personal credit reports. Those are confidential information. So this gives it kind of a quicker breakdown. And this is great if you're new to, as like I said, if you're new to credit, or you're managing a large credit team, or you're training somebody. This helps them treat everybody the same across the board. But it's also helpful when they're processing an application, like, okay, now what else do I need to do? So it's not only is it a numerical spreadsheet, but it's a checklist, right? So if you go to the next slide, I believe that is right here. So this is, you can make whatever you want. This one shows, so at the top, it says original credit application. It's assigns point. Do you have the original? I consider an emailed application the original, right? Anymore, it's all online. Personal guarantee. And what is their credit score? That gives you a point. Is there a second personal guarantor? Was their credit score? That gives them points. Is there no personal guarantee at all? Do you have an audited financial statement? If it's a private company, they're probably not going to give those to you. But again, you can ask. They might give you tax information. That could be considered, in theory, audited financial statements. They're not technically audited, but we hope what they submit to the government is true and factual information. How many years have they been in business? Assign a point. Legal entity on the app confirmed. So have you actually gone in to your Secretary of State and said that, yes, this is the business that has signed the credit application. This is the business we're going to be doing business with, trade references all the way down. And yes, Amy, I'm willing to share this. I will give this to Lori. And, again, this is just kind of a generic. You can also use this, and I don't know how many of you guys do this. If you do an annual review, or if you have a customer that starts doing more business with you than they have in the past, if you see the second section, it shows more points that you can do. So, continue if this is a credit review. So how many years have they been doing business with you? Maybe you use this if it's somebody who did business with you years ago and now they're coming back, right? But if you look at the bottom, and I know it's tiny writing and I'm sorry, but you can kind of see where the credit score adds up. So, if you have a 5, it's best. It indicates minimal risk. 4 is good, moderate risk. And then off to the side, you can see how those criterion go. And again, don't use this as like the end all do all. Think of it from your business standpoint. If you are trying to build an area, you might want to be a little bit more lenient on some of these things. So you build the revenue in that area, in that state, in that city, whatever. But take a hard look at this and say, okay, where do I draw that line, right? Because at the end of the day, again, our job is not to say no, it's to say how. And I use a term that everybody laughs at me. I say, when we have a customer who doesn't qualify for an open account, I call them our preferred cash customers. Why? Because we prefer they pay cash. But it makes them feel good, right? You're our preferred. We set you up an account, and maybe in 6 months, we review, we see how you've been doing, and maybe then we open you for a small line of credit. It allows a new company to grow We're partnering with them. We're giving them the ability to grow with us, as well as protecting us, right? And it allows us to get to know them better as we move forward. Going back to vetting these customers, if they have 6 months of paying their bills in full on time on COD and those balances are large, pretty good bet that they're going to continue to do that, right? Not always, but pretty good bet. Okay, you can move to the next slide. So here's your not so hidden resource. Your sales staff. Your sales staff are your boots on the ground, right? They're the ones that are out there every day, and they're not just talking to this potential customer. They're talking to other customers who may know this customer. Something might come up, right? And I know some of these you're looking at and you're like, well, why would I want to know that? Well, okay, so let's just think about it. Right now, we have supply chain issues. We have issues with labor and staffing. So your salesperson goes out on a job site and come to find out that this person that's applying for credit with you got kicked off a job because they couldn't perform for whatever reason. Maybe they didn't have the supplies they need. Maybe they didn't have the labor force, whatever. That's part of that information you want to know, right? Maybe they find out the health of the owner. My previous company, it was a long established company, had been around for 50 years in the Salt Lake area. And when I say that there wasn't anybody that we did business with that the owners didn't know, I am not lying. So, they would hear about the health of the owner. Is that a concern? Well, it could be if they're your personal guarantor, right? Management team stresses. Right now, we're all seeing it, staff turnover, vacancy in key positions in a company. Those may be some red flags that you might want to address. Again, not saying no, just information for you to have. Personal information. Is there a lawsuit? Is there, the check signer is been out of the office for 2 months? Is there an impending divorce? These might seem more personal information, but at the end of the day, it's information you need to build your file. Again, not saying you're going to say no, but just saying that this is information. Forewarned. We want to be forewarned, right? Okay, next page. So an ounce of protection is worth a pound of cure. So you've gathered as much information you can, and you've decided to move forward with this new account. Maybe you're still on the fence, right? So what are some other ways to protect your company and your company's investment? Purchase money security agreement, depending on what you're doing, right? UCC filing, especially if you're leasing equipment. Lien or pre-lien, get a letter of credit. Prepayment or percentage payment. This is a big one. Again, as I talked earlier, I preferred cash customers. Can you ask a customer, Mr. Customer, we would love to do this job for you, but we can't give you the full amount. Can you put up half? Yeah, you can ask. If they say no, say, well, then we can only give you up to this amount. And then once you pay that, we'll give you some more, right? So that way you are maintaining your risk level within your company. Joint check agreements, if appropriate. Now, I have my own feelings about joint check agreements, and I know a lot of you guys are going to disagree with me, but joint checks are iffy at best because most companies operate out of lockboxes, right? So if you have a joint check and it goes to a lockbox, are they going to ask, does it need a second signature? No, they're just going to deposit it. And then now you're trying to get your money back from this other company that received the joint check. I've done that twice in the last 3 months, and I really don't want to do it ever again. So again, joint check agreements, if it makes sense, just make sure that the joint check goes to you and not to the other person. And then it goes to your location, not to your lockbox. That way you can make sure everything's signed under the dotted line and everything's done the way it needs to be done. So next slide. So again, at the end of the day, the easiest decision is to say no, right? You can just say, nope, not going to do it. Nope, not going to do it. I envy, I hate to say this, but I envy sometimes the credit card companies, because how easy is their job to say, you don't pay, we're going to sue you. You don't qualify for an account, sorry, you don't get one. We don't have that luxury. We have our salespeople and our C-suite and our owners and stuff saying, no, we got to make this work, right? So whatever you can do at the beginning to secure whatever amount you're going to grant to this customer, even if you don't grant and you do, COD or prepayment or whatever you want to call that works for your company. That's the hard part, right? That's the hard part, to say yes. So with that, is there any, I know there's lots of stuff, and Lori, I hope you've been monitoring the questions, because I kind of
Yeah, the two main ones that still are out. Jill asked where she can pull a personal credit report.
You can go now for my company. I have access to, it's called CIC. It's a personal credit reporting service that we pay for each time we go through and order a personal credit report. There's several companies out there that offer personal credit reporting services. The one thing I am going to caution you guys all on, because we've had this happen, where the customer pulls their credit report and sends it to you, whether they pull it from, creditreports.com or whatever that is, don't base your information off that. You want third-party verifiable credit information. And for them to have pulled it and sent it to you is great. That's nice. But, you want to be able to access all of the information, because a lot of people I know can manipulate anything that they get and make it look wonderful. I'm not that coordinated, but okay. Some people are.
I can tell you the ones that we've found to be the most popular were Cortera and Equifax.
Yes.
So those are some good ones too. And if you're interested, not to do a sales thing here, but we are doing a webinar tomorrow, more than a credit report. So it's actually on credit reports and different ways you can get them. So just for thought there.
Nice.
Eric asks, what do you do if a customer refuses to endorse the personal guarantee?
Well, then there again, you have that option to say, unfortunately, we can't move forward with offering you terms without the personal guarantee. We'd be happy to offer you a COD, or as I call it, a preferred cash account. And then in 6 months, we can reevaluate. But right now, we don't have enough information to validate your request for credit. The one thing I'm going to say is, and I was talking about this in one of my groups the other day, and if you have access to a network or a trade group, if you will, that's another great place to get information, because 9 times out of 10, if the person is coming to you and applying for credit, somebody else in your group or your network has heard of them. So you can always ask the question, as long as you stick to factual information. I think where it gets kind of dicey is when somebody starts going off on a tangent about, 20 years ago, he defaulted, blah, blah. No, you want current factual information. Are they a customer? Yes. Do they pay their bills on time? No. What is their highest credit? $25,000. What's the longest they've been past due? 90 days. Do they respond to you? Yes. Slow but collective, right? That's the information you want to hear. So always reach out for that. But there's so many resources where you can reach out and ask questions. But getting back to the personal guarantee, we've had some issues recently because we have a duality in our company, because a lot of what we do is contractual work. And so we have been asking, in addition to the contracts, we've been asking for a credit application, because contractor, no, you are still lending your company's money, i.e. everyone that works for your company, it's their paycheck and yours, hedging the bet on this company paying their bills, right? And you have legal information inside the contract that should protect you. But at the end of the day, how many contracts actually tells you who's responsible to pay the bill? Who do you send your invoices to? And thirdly, when will they pay you? So when a customer pushes back and says, we're not going to sign the credit application, okay, well then here's the situation. We either can't move forward with what we have, or in our case, if it's just the contract, we say, okay, so we can allow you for just the contract, but anything that falls out of that outside the contract, you have to pay for at the time of service. That usually pushes them into signing the credit application because they don't want to go through that hassle, right? I don't know if you guys are familiar with what a concrete service company does. So you see us out on the freeway, right? Out on the highway. We're the guys out there that are grinding or sawing or cutting slabs out of pavement or whatever that is. So our guys are out there on the job, and the project manager or the foreman, whatever, says, hey, since you're here, right? So that work doesn't fall within the contract. And it's difficult to get the people who are paying the bills to understand that, hey, your project manager asked us to do this. So that's why we are asking for both. And sometimes we do get that pushback where they won't sign the personal guarantee. They won't sign the terms and conditions. And we just have to move forward and without being mean, I guess, about it, just say, well, these are our policies. This is what we have to work with. We would love to do the job with you, but we need this information. We need that personal guarantee. Or we can do it this way. You can prepay. I've had my previous company had several customers that would prepay months in advance. So they would come in and hand me a check for $30,000, and then they would eat away at that. And then when they would get down to a certain amount, I would send them a note and say, hey, you're down to $3,500. And they'd bring me in another check. There's ways around it, but don't be afraid to say, I need this from you in order for us to move forward, right? It is a relationship. At the end of the day, what we do is more about sales than sales is, because we have to create the relationship. We have to maintain the relationship, but we also have to get paid for that relationship, right? So don't be afraid to ask the questions. Don't be afraid to say, I can only do so much. And also understand, guys, and I know this causes heartburn, that sometimes you have that customer that goes to your boss or to your president, or we call them, and I don't know if you guys have heard this term, FOBs, friends of boss. It's out of your hands. And if they say, do it, you do it, right? Because at the end of the day, they sign your paycheck. I just make copious notes so that if the time comes, I can go back and say, well, you told me to open this and I gave you all the reasons why we shouldn't. So now you can call them and ask them for their money.
Great answer to that.
Yeah.
And we do have another question from Melissa. She said, when you stated that customer may not be held responsible for any amount over their approved limit, is that specific to a state or is this everywhere?
My understanding, and again, this was back when I was doing consumer credit, which is different than commercial credit. It is a federal law. It is not state to state. It is a federal law that if you assign a credit limit and you allow somebody to go, that's why credit card companies are so hard and fast. You have a $5,000 limit and you're at $4,999 and you charge something that's $2, they decline that because you're not responsible for anything that goes over that. Now that doesn't include like fees and stuff, because Lord knows they can charge those all they want to. But in construction, I always err on the side of caution. I would rather be able to walk into court and say, we assign them a credit guide of $75,000. They now owe us $80,000. And I'll be honest with you, I have never had that come up in all of my court cases. I've never had that come up in small claims or in regular court. I've never had that come up where they asked what credit limit or credit guide we have assigned. But if it's on documentation that can be subpoenaed in court, the judge may take a look at that and say, you gave them $75,000 and now they owe you $150,000. When were you going to put the brakes on?
Mm-hmm.
Right?
Yeah, I've heard that a few times.
Yeah.
That appears to be our last question there. If anybody wants more information just on credit in general, we do offer a construction certification course. It's Foundations of Credit, as well as a book that Thea Dudley has written, and she teaches as well. If you want more information, you just go to levelset.com/Thea-Dudley. And that's it. Thank you, Deanne, so much for, taking your time. You had some great information. People said that you just did awesome and it was a great presentation. If you wouldn't mind sending me that page that has the credit scoring, I can go ahead and attach that. Yeah, I'll attach that to the recording email that goes out.
Okay.
For everybody else, thank you for joining us today. Keep an eye on your email. You are going to get an email with a quiz. If you answer the quiz, you'll get a certificate of completion for Deanne's course here. And thank you again, Deanne, and thank you everybody else for attending. We hope to see you at the next one.